say venture capital should be plan F. 75% of the companies that do raise venture capital fail. So it's a very aggressive option.
Founders often think that investors are rational decision makers, looking at numbers and spreadsheets and pitch decks. From your experience, how emotional is venture capital?
Angel investing is a lot more emotional than VC. VC, the math has to work out. Like, they've got to get their partners on board. There's a collective win. But angel investment is a much more emotional play because it's in individual investors' own personal capital versus collectively investing into a fund where they kind of bet on your behalf. Pre-sale, you could pre-sell anything. And if someone is not willing or capable of doing that, that's laziness. You're not willing to have the conversations with your customers and collect that. Why do you think an investor will go pay you to do that when you're not willing to put in the work? 99.9% of founders I meet pitch as if they're speaking to their target consumer or as if someone's in their industry and will understand what they're doing. We never want to assume. The goal of pitching someone who is going to go pitch your target consumer for you and on your behalf and know who that person is.
Hey everyone, this is Said with Messy Growth. My guest today is Kat Weaver, serial entrepreneur, exited founder and CEO to Power to Pitch. She started her first company in college after having her valuables stolen from a gym locker. Sucks, right? Built it into a real business and sold it in 2022. Since then, she's been on the other side of the table as an angel investor, advisor, coach, helping early stage startups, founders raise capital and sharpen their pitch, something that we can use a lot more of. She's won 5 entrepreneurship competitions, advised companies from scrappy startups to FedEx, and has worked with thousands of different founders. So today we're going beyond pitch decks and fundraising tactics. We're talking about what founders consistently get wrong, about raising money, the psychology of investors versus what founders think investors want from them, from their pitch, why some great companies struggle to raise while weaker ones still get funded, and the emotional pressure behind fundraising that nobody really talks about that much in public, especially on LinkedIn. So, Kat, welcome to the show.
Thanks so much for having me. I'm excited to be here.
Absolutely. You come highly recommended from our mutual colleague, and she spoke praises of you. So I'm really glad to have you here. So I want to use as much of our time possible and, of course, ask you a set of questions. In my interest about how you've been I've said about you have been the other side of the table as a founder, raising capital and now helping founders raise millions through Power to Pitch. Is there something about fundraising that founders completely misunderstand until they go through it themselves?
Yes, very many things. We could be here all day talking about the problems, but one of the reasons that I started this company in the first place was because I met so many incredible entrepreneurs and they struggled to talk about themselves, what they do and what they need. And then on top of that, it's what is the right kind of capital for my stage and future vision? So when someone embarks on fundraising, I see them a lot of times they glorify like the Forbes or TechCrunch articles that they see, or, oh, this other startup, they got into YC again. And it's easy to compare, but going the venture route, going the investor route is the most expensive form of capital. No one talks about the other options or combination of options, whether that is through customer financing, grants, there's multiple kinds, debt, then going after strategic angels, and then and only then considering and thinking about VC. It is the hardest and most expensive on the food chain. So I always say venture capital should be plan F, not plan A.
How come it's so glorified then? Because if you look at most of the startups and you're talking about grants and everything, I think that is a minority, not a majority, so to speak. So if there is an A, B, C, and D, a lot of the folks just go for the plan F. So why is that?
I believe it's glorified because that's what makes the headlines when you see the flashy large amounts of capital, that they look good on it, when it comes up in your social media feed. It looks good when it sits on the news, when a lot of all people also don't realize that those relationships probably took years to build versus, hey, I just came up with this idea. I haven't talked even to enough customers or pre-sold or done any of the things to get
Right.
scrappy, and they expect someone to fund that. So I think it's glorified because it's also an easy route. You front load the responsibility on someone else. But then at the end of the day, you're also struggling and using equity as a bargaining chip, which is really expensive. And that person might not have your best interest at heart, the company's best interest. And they could be predatory in terms of their terms. And most investors are also taking the biggest risk. So they might have to be predatory to protect their interests to a certain degree, but I think it's glorified for many reasons, and mostly because it looks good on on the news. But I'll tell you, the other day I met a founder who was like, "Well, I thought I want to go VC so I can say I put that on my LinkedIn profile." Like it's some badge or like logo to add in a way, which is really silly, but it's because people see all the PR features and articles and thinks that it makes them this kind of mini founder celebrity if they do that.
Mm. It's fleeting though. I mean, after a headline, then the news cycles are so fast nowadays, and we're even talking LinkedIn and Forbes and whatnot, or TechCrunch. People are not going to remember, but you are going to live with the fact that you now have a VC investor. They want results naturally. For not to be harsh, but they want results, so they're going to push you to the ground and make sure that you actually go ahead and deliver. Is that the most viable route for the founders? Because I read this story, and I don't know how much of that is true. I'm not well versed with the world of fundraising, but just because you raise a lot of money, that doesn't really, and you get diluted quite a lot. So naturally, what you end up making towards the very end, after having spent 5, 10, 12 years in a company, there are better options out there that are less flashy than being on the cover of Forbes magazine or being at 30 under 30. But turns out that you have pretty much the one shot that you had of a great life. Essentially, you could retire after 10 years of grueling work. You just blew it.
I don't know, have you seen the statistic around the fraud that for the
Oh my
Forbes?
lord, yes. I think it's like 30 under 30. Like
They've
most of the
made
major.
more in fraud than capital raised. That's a fact. What does that tell you? That they you wanna glorify all these companies, and I'm not saying, "Oh, you got Forbes, so that makes you fraudulent," but it's a matter of clearly it's overglorified if they've committed more in fraud
Mm,
than actually doing right and growing and having big exits.
mm,
Now, I will say, you probably always want a smaller piece of a bigger pie,
yeah.
but when you go the investor route, now you've got legal obligations and you've got a board to report to. You've got people who have put maybe their personal or friends' capital on the line who have invested or trusted in their fund to manage that on their behalf. And venture math works in a way where they're expecting billion-dollar outcomes because it's got to make up for all the other mistakes and the
Oh,
super
100%.
burn to the ground growth that most companies experience. And I don't know if you've heard this either. This is another public statistic where 75% of the companies that do raise venture capital fail. So it's
It's a
a
fact.
really very aggressive option.
Yeah. Wow. Interesting. I mean, I was speaking to a founder on this very podcast, and that person said that I'm more than happy to grow it slow, keep it bootstrap. If I need to raise VC money, and that's okay, maybe I will go down that route. But I'd much rather not wake up to Slack messages and quarterly board meetings where, for 1% or 2% or 5% growth, I'm pretty much not going to my kids' recital at school, or I'm missing out on a lot of the things, and it's essentially getting blood pressure issues over time because of all that stress that is coming in. It's interesting stuff. I'm just curious as to what's the modus operandi for a lot of folks? Like, why would they go that route? But I think you've pretty much answered that question, which is it's fame. It's the
Well, I
celeb
also
status.
see when you see that glorification of it, I find that many founders think that that's the merit of them being a good or bad business.
Oh
And
wow.
that's also fortunate
Yeah.
because look at, Sarah Blakely. She's
Yes, I
sold
met her.
for a one she owned 100% of her company and exited for over around $1 billion.
Smart woman. Yeah.
Now, that's not to say everyone has those kinds of resources or level of grit or sacrifice or means to do that,
Mm,
but just because that's not the only way to achieve massive
sure.
growth. Why I say wait to do that. And the best founders, the most successful founders, they get to be picky. They've built the relationships early, so they get to say yes or no when the time is right, or if someone's going to be strategic or not. Because not if you get anything from me today, it's not all money is good money.
Yeah. 100%. That should be printed on a T-shirt and be sold. Actually, I don't.
I
Money's good
agree.
money. You started Locker Lifestyle in college and eventually exited the company. Looking back, what did that journey teach you about entrepreneurship and that you couldn't have learned from any other classroom? Which essentially is tied to the previous question, which I wanted to ask, is that you can't really go to school to learn about funding, investing. This is something you learn from experience. You learn from people who've been there, such as yourself. How do you educate yourself on all these things? So sorry, it's a loaded question, but I wanted to ask that.
No, I think it's a great question because I don't regret getting my degree, but it did not prepare me for the real world of actually running a company. And when you think about entrepreneurship, the only way is to really immerse yourself. I didn't come from the venture world. I didn't grow up around a ton of investors. When I lost my first company to a fire before I did all those pitches, I had nothing. I started from zero and found that learning to pitch was not just a funding thing, it was a life skill. So when I taught myself to clearly communicate and educated myself on that, and there is no excuse, there is too much free stuff these days. Someone's going to use that as an excuse. That's a personal problem, I believe, because I worked so hard to get in those reps and do all the things, and I ended up winning 22 of 23 pitches I applied for. Like that's
That is
not luck.
stunning. Yeah.
That's that was copy and paste. That was a system that I had to teach myself through immersion. And when founders are going through the investor world, you can read as much about, how to create FOMO and make this beautiful deck, but if you don't actually go through that process and live it and be willing to make the sacrifices to make it happen, there's no perfect book that's going to solve all your problems and be your magic button. The best founders learn by doing. And I'll tell you, I was also a bit grateful that no one told me how hard it would be. I mean, you kind of hear it, but like, man, was it just an emotional roller coaster all the time because I didn't know anything in regards to manufacturing or overseas payments. And there was no course on that of how to do sampling and learn how to air freight your product over here and get through customs and like just the craziest stuff. And a big pivotal moment for me in terms of resilience was I had been under contract 4 times before actually selling the business, and the
Wow.
3rd time fell through the week of my wedding. So, fun times being an entrepreneur, it's not as this, like, glorification as you think just as in, like, raising capital, there's always those moments, but I believe that the founders who are willing to be the grittiest and make the most sacrifices are the ones who will win at the end of the day.
What kept you going? What's your driving force?
The reason I sold that first company was because I started actually helping people pitch on the side and get money. And I found that it was so much more rewarding when it was my actual superpower. And my fiance at the time, now my husband, looked at me and goes, "Oh my gosh, you got to take that inventory and burn it out back. You got to coach and support these people." And I was like, "Whoa, man, worked really hard on this. I'm not just going to do that." But he recognized, hey, that is something you're so good at and it lights you up in a different way. So I was so committed to doing that because I wanted to leverage that exit money, which I'm not on an island somewhere. It was just enough for
Are you
me.
sure? Not a private jet flying around?
One day I'm
A
getting
G6?
on my vision board. If anything is motivating more than flying commercial, I don't know.
Gulfstream.
Yeah. So anyways, I started that company kind of literally as a side hustle to that company. And my driving force was like, I have to do this to be able to service more founders because I don't want the reason they go under is because of lack of knowledge or access to
Right.
capital. I want to give them all the knowledge and opportunity that I can that I wasn't prepared for because no founder deserves to feel that way. They
Mm.
could have these amazing businesses and just not know or have the means to invest in the education to get there. And so that is my North Star driving vision.
Yeah. A lot of folks talk about that you can have the best product in the world, but if you don't know how to sell it, you're not going to go far. Okay, I understand that. I guess in 2026, it's a lot easier now. You can have the best product and you can just do a lot of different things in order to be able to get distribution right. Is that the same with funding? Is that when you're going in front of a VC and you don't have the skill set to be able to pitch, even if you try, some folks just don't have that power. Is there a chance when they walk out of that room, they're going to be less fortunate essentially in getting that funding because of the fact that they can't tell a story? Or storytelling is 50% of the game right there?
Storytelling is a very big part of the game, and it's a skill that can be learned. So I started off, you may not believe this. So even though I won all those pitches, I would black out every time. I thought
I
I was gonna
don't,
get
I can't believe, I'm sorry, I can't believe that.
I
Like, I
was
just,
so uncomfortable. I can't even tell you the first pitch I did, my name tag was in my hair. I'd sweat through my outfit just because I purposely wore black knowing I was gonna be so nervous. But it took thousands of hours of practice and reps. I learned that skill. I immersed myself in that skill. There was no room for failure. This was the only option. But when we go back to the storytelling piece, and I always say pitching is a life skill. Like all the founders who I've helped raise multi millions, That skills transcends all of the rest of their business. They've told me, "Oh my gosh, our website has changed, our marketing proposals changed. We've gotten into more retailers with that pitch." That's not a mistake. That's not luck. That's actually very purposeful. And when you let's go back to that Forbes failures and how they've defrauded all these investors, committed more in fraud than capital raised. Those people had nothing to show for. They told a great story and made people so confident to invest so blindly. So that's an extreme example, but when you think about the power of storytelling, it can actually carry someone a lot further. And
Yeah.
especially in the really early stages, an investor is buying into the founder before the company.
Oh,
So
yeah.
if you are not emulating that confidence that you're going to do the most right by the money at the end of the day, you won't get very far.
Yeah.
But I don't think it's a thing of someone having it or not. I've met
Yeah.
some really incredible founders who started off a real diamond in the rough, but when you put forth the effort, it's absolutely possible.
Yeah. It's just like as you said, spending hours and beating on your craft consistently, and you're going to get there eventually, even if it takes a little bit longer. I think like the story that comes to mind when we talk about defrauding is Elizabeth Holmes. I think she was a Stanford dropout, 19 years old, and she convinced some of the best
Theranos, is that what that
Theranos.
was?
Yes, yes, that was a major story. I mean, it's incredible. And if you watch the documentary, I don't know how much of that is true. I'm assuming there's a lot of that truth in there. Storytelling. It's the person that you know, personified a persona, so to speak, and then went after it hard. I guess a lot of that in there. Pulling back, let's go back a little bit. Um, when
It's not
founders, sorry, good.
story. No, sorry, I didn't mean to interrupt, but when we hear storytelling, we think, "Oh, like, I'm not connected to the business," but when you talk about your product, it can be a story. When you talk about your target market, your financials tell a story. So there's actual multiple elements within the pitch itself that are technically a story and should be in order, kind of like reading a book that makes it easy for someone to follow, repeat, and then
Yeah,
go pitch on your behalf. That's the point of a story, so I just wanted to clarify, it's not like, "Oh, I have
yeah.
to have this great founder story and connection." It's about all of those elements working together as one storybook.
Oh, I know it's not directly connected to fundraising, but I think the best ad that I've seen and just the right storytelling, and it's to this day, it's imprinted in my head, is Dollar Shave Club. I don't know if you've seen that ad. I think it
Yeah.
was like $500.
Mhm.
Everything about that is just that. I mean, there's artistry involved in there, obviously, but it's just like I love the fact that how the founder he wrote that whole thing down and just curated it. I think that's incredible storytelling, even if it doesn't have a lot of the fluff out there. So just something incredible. It's just something popped out when you're mentioning that. I want to talk about something. It's critical. We just try to pull back a little bit, which is when founders talk about fundraising publicly, magazines, so on and so forth. It is what you said. It's very glamorous. It's the it's somebody. There's a quote of like somebody said that it took me 20 years to become an overnight success type of thing. A lot of work that is involved to get to that cover of a magazine. But behind the scenes, what does the process actually look like?
It is true that could be a 10 to 20-year overnight success, but what I've noticed, it's not as much the growth of the business, it's the person that you have to become in order to operate at that caliber, and you have to constantly break ceilings, your own skill sets, and with things that you don't have before. It really something that resonated really with me. Have you ever read the book 10x is greater than 2x?
I've not.
I highly recommend it. I think you'd really enjoy it, especially around this conversation. And it's about how it's easier to go 10x that level and break the mold of the small pieces. And the majority of people will only grow 2x in their lifetime. But when you actually get that North Star, it's
That's
so
incredible.
much easier because you peel away the other unnecessary layers because you're so much more focused. And I'm oversimplifying it, and I still recommend the book. But what goes on behind the scenes is a constant bout of sacrifice, judgment, self-doubt, just to name a few. And even as someone who's exited, won a bunch of pitches, helped founders raise over $70 million, I can tell you sometimes there's days where I'm like, is this enough?
Mm.
But that means that I want more, I want growth. I haven't reached my full level of capabilities and I'm a lifelong learner. And so I see that as when a lot of the founders that I work with, this founder's done 10 million in life in sales and still doesn't think they're enough. Like sometimes those are the founders who are like, more, more, more. That's not always the best thing, but what really goes on behind the scenes is sacrifice and self work
Mm.
to be able to, I think, hit that caliber of what you believe that you can become.
Yeah. Tied to your question, what makes a great founder?
So we actually screen for 4 traits before deciding to work with a founder. They are as follows. 1 is coachability, 2 is grit, 3 is passion, and 4 is transparency. And in that order. If someone is
Transparency. Very
be
good.
coachable, then we can't help you. And you're probably going to be ignorant with
Yeah.
investors. And, the coachability should be pretty easy to think about. But grit is in you're probably going to pivot, something's going to happen, change, got to be willing to sacrifice. Passion is in no one will be as excited as you. You cannot expect an investor to carry your same level of excitement. And the fourth in transparency is are you strong enough to share the difficulties and the challenges because an investor also knows that life isn't perfect and the growth path isn't exactly like this. It's more of like that roller coaster wave
Yeah.
that goes up and up. But that transparency piece is funny because I worked with a founder who said, I don't want to share that, my co-founder is my son. They said, well, what happens when they find that out because of social media and you have the same last
Yeah.
name? Like there are some things that to people they want to put on this front to provider capital providers and funders that things are perfect. So we screen for are they willing to be transparent with us about the challenges and things so they can fix them. And I relate that to being a good growth worthy founder. And I interviewed a lot of investors and they would agree that those are the top 4 traits they look for as well.
Mhm. Is there a
And
lie? Sorry.
I was just gonna say, and they're a little crazy.
You have to be a little bit crazy to do all this, right? I mean, starting your own company, you're a lot of the folks that I know that started their own companies, they're doing everything. They're literally going downstairs, eating dinner with their family, coming back up, starting working. I was used to work with a founder, and that was his life. Literally at 4 a.m., he's slacking. I'm like, dude, you should be sleeping. I'm in Poland. He's in the US. Like, why are you answering that? Because that's just he's wired that way, and it's just I thought he's the odd one out, but it turns out a lot of the founders are just like that, and the most successful, they're more hardworking, and I guess there is in there, so there's that crazy element in there. I think Elon put it really well, and I've shared this here before, which is entrepreneurship was like staring into the abyss and chewing glass. You have to be crazy, I guess, to do either of those things. So I think there's truth to that in there, right? Really like that thought that he shared. I wanted to ask you: is there a particular lie that founders tend to tell themselves when they start raising capital? Is it uniform across anywhere? Are there any commonalities?
Yes, it's the I'll invest or do this once I'm ready or I have more time. There's never more time. There's always a bajillion more things to add to your to-do list. And there will never be a perfect or right time. Ever, ever, ever.
Mm.
I've never ever seen that come to life. So when I see a founder of like, oh, I'm building, I'm gonna wait to talk to investors until I'm ready. They want to see you build now. They want to build the relationship now so they can see your level of growth and decide whether or not you're worthy of backing because they've seen that process happen.
Mm.
And I also see a lot of founders wait to invest in themselves and the skills. And as I mentioned, you kind of have to do that to hit those next layers and levels of growth. I wish I didn't wait that long to do that.
Yeah.
Always willing to pay and invest forward to the answers. Are you familiar with the company TJ Maxx, like the
Oh
clothing?
yes, yes. I shop there. Like I love it.
Too. So my power to pitch because I didn't have enough business credit when I was selling the first business and I had the payment, what payout schedule was,
Yeah.
strange. I literally started my second company, Power to Pitch, on my TJ Maxx credit card because I didn't have enough business credit for the first business.
My
And at
God.
the time, I didn't tell my husband. I just did the charge, and TJ Maxx texted me because it was this big charge, and they were like, "Is this you?" And I was like, "Oh my god, no!" And I told my husband after, and he's in corporate, and he's looking at me like, "Babe, I believe in you, but what the heck is
Yeah.
going on?" Kind of thing. So a little bit of crazy, a lot of bit of grit, and I'll write a book one day.
100%. I'll buy it. That is a crazy story. I guess the question is, I know hindsight is 2020. So now that you look back and go, yeah, that's a great story. Is that you did it because of an insane belief in the idea or an insane belief in your own self?
Myself. Nothing to do with the idea. I have never not had an ROI investing in myself and betting on myself. And I think part of that too is I played sports all my life. I
Mm,
think that drive really helped. I love investing in former athletes because they know the level of sacrifice it takes. Can't maybe see your friends, your training, nutrition. You got to dial in on certain things to achieve. And I played tennis in college and I had to manage school, a scholarship, and then I was starting this company. So the answer is undoubtedly myself because I know whatever I put my effort towards, I will outwork everyone in the room to the best of my ability.
well, now we understand why that TJ credit card charge went all the way through here. That us to us leading have a chat. An awesome story, very inspiring. I want to ask you something. Is there why do some objectively strong companies on paper, you talked about it like storytelling is a large part of it, but I've seen that there are companies that are very strong on paper, doing great in revenue, great retention numbers, great teams, but they struggle to raise money. While a lot of the weaker ones, where you're looking at them and you're doubtful somewhat, they get funded. No, like hand over fist. What is primarily happening over there? What are the dynamics at play that most folks can't see?
I've seen the founders who do well, and raise continuous rounds and have investors reinvest in them and tell their friends about it is because they chose to build the relationship early. Ask for the intros, ask for help, tell their investors when something is going wrong or they're struggling because they might have an answer or a connection.
Yeah,
Then it's much more likely to like pass your name and intro. Investors love deal flow from other investors. And so when they are committed and believe in someone, it's so easy to say, like, I had a big advisor who joined and invested in a company, and I was convinced just on the merit that and basis that that guy was a part of it and wrote a
jeez.
check. Just because I've seen them operate at the high level, use the company a little bit, thought decent, but because that person was willing to bet on them, I had faith because of that bet.
Yeah, that's incredible. That's incredible. And I guess it's just it's compounds, right? I mean, if it goes well, and then you're on to the next one,
Pool
then you
party.
yeah,
One of
100%.
my if you've never heard, so Rich Malloy, he has a fantastic podcast called the VC Minute, and he talks about this concept called the pool party, where when you go to one, it's kind of awkward and no one wants to get in first. But when the first person does, it's a little bit easier, and then the second and third, and then now you feel like an idiot for not being in
Yeah,
the party,
yeah,
and that's kind of the concept of investing. Investors kind of like the game of playing this FOMO and seeing what's driving, and that's why people put end dates on the raise. Like the founders who
mm,
have these forever open raises and they're taking cash as they can, it happens a lot slower and less frequently without deadlines in place and getting
yeah.
people excited because investors are people too. We forget that. And they do make emotional decisions at the end of the day.
It's you just read my mind about my next question, which was going to be, founders often think that investors are rational decision makers, looking at numbers and spreadsheets and pitch decks. From your experience, how emotional is venture capital really? If you were to think,
I can't speak for everyone here. This is just a shared experience, but it is pretty emotional. I'll say though, angel investing is a lot more emotional than VC. VC, they have the math has to work out. Like they've got to get their partners on board. There's a
yes,
collective vision. But angel investment is a much more emotional play because it's an individual investor's own personal capital versus collectively investing into a fund where they kind of bet on your behalf. And so they have to have that feeling towards the founder and they don't typically have benchmarks to hit. They don't have to, re-up the fund every few years and keep raising. It comes out of their own bank account. So that's the most emotional form of capital. That's why I
yeah,
recommend go for that before VC because you've got a much better chance.
yeah, yeah. Plus, also you're gonna get abused if you fail through the HL route. Um, there's a thin line between founder confidence and founder delusion. Can you tell the difference?
Yes and no. I think there's always more delusion than confidence because nothing in life is a guarantee. Only death and taxes are. It's like the it's all delusion, but it's projected and calculated delusion. I also love when a founder is not in a particular industry because they get this bird's eye view and they
Yeah.
haven't been in these silos or boxes in that space for so long that they get to go outside of the box. And to go back to Sarah Blakely, like she was never in the fashion industry, which is
Oh,
why I think
yeah.
she did so well because she got to take that outward consumer lens versus playing by the same rules of things that have gone the same way for how many years.
Mm, mm. Yeah, 100%. Have you ever actually had to tell a founder that their idea simply isn't fundable? How does that work?
Get in that way, but I get a lot of strange pitches.
I bet.
And honestly, it's not as much of the idea. Sometimes it's just like, "This isn't backable. That's fine. Go get pre-sales. Go prove me
Mm,
wrong." But then there are some founders who I met this person who spent $50,000 to pitch several groups of angels. $0 closed. I mean, I just hear a lot of irresponsible things, and I
yeah.
can tell it's in part I don't think it had anything to do with the idea. It was the founder that was the problem. Betting on the wrong things, desperation, not spending time on actually building and talking to customers and hoping for this Hail Mary from a random investor who's gonna save this dying company. It's, I mean, I've heard of some, like, really crazy things, and maybe to me it's crazy and it could be the next Uber, right? Like, I'm not all of means, but I look at more of the founder and those 4 traits that we talked about to determine whether or not I believe I can help them and get them the success they deserve.
Yeah. I think it was Harry Stebbings from 20 VC that said it the other day. He was like, if I would have just cut a check for everybody who came up with an idea to me, I would have had more money than where I was picking and choosing because he didn't get a chance to invest in 11 labs and this skyrocketed. So you're right. It might be Uber to one, but to the other person, you just there's something that is just not clicking for the most part. So it's always that aspect of that in there. Venture capital market has changed dramatically in the last couple of years. How should early stage founders think about capital today compared to, let's say, 5, 7 years ago? I kind of be like, even on the go to market side of things, a lot of the playbooks are just inundated. Just they are not working anymore. We have LLMs, we have folks buying in a different style, different mediums are being used, so on and so forth. Is there something for that, an equivalent of capital nowadays?
I will say what shouldn't change is the focus on the relationship building, focusing on it before you need it. And I'm still stand by thinking about the order of capital in terms of customer
Mm,
financing, pre-charge, pre-sale. You could pre-sell anything. And if is not willing or capable of doing that, that's laziness. I truly
really?
believe. Absolutely. You're not willing to have the conversations with your customers and
Ah,
collect
fair
that
enough.
data. Like, I mean, why do you think an investor will go pay you to do that when you're not willing to put in the work and have the leverage behind that? I just think that's so lazy. And so love customer pre-sales financing that is straight leverage. After that, corporate grants, they're free. I won 6 figures worth. I never had to pay back and no one even asked what I did with it. Huge leverage for companies under 1 million in annual recurring revenue. Corporate grants are fantastic. They're different in government grants in the sense that they're smaller, between like 1,000, 100,000 on average.
That's a lot.
And, but they pay out within like 2 to 3 weeks
Oh,
and
wow.
you get whatever you want with it, and then there's PR behind it. I mean, it's just silly for people to not consider that route. Now, on
Yeah.
the government side, it can be great, but it's a much longer time period. Might take a few people to hire and manage the process, and it's a credit and debit system of you're not getting that cash right away. You got to get your expenses approved by the government, hopefully paid out in 3 to 6 months. So a little bit longer, and it's more niche. Then that third layer I say is debt. Debt is cheaper than equity. Credit cards, lines of credit, build a relationship with the banker. There are options. Now,
Yeah.
typically, if you've a little bit of more sales or skin in the game, but if you have customer pre-sales or POs, that's where you can leverage some debt options too. And after that is individual angels and angel groups. They're going to be a bit more strategic, probably answer your call a bit more quickly, be more supportive. Then after that layer is, I say, kind of between typically family office, they're a bit more lenient than VC benchmarks. but they kind of want to see later stage. And in
100%.
my experience, it really depends. And then venture capital is the last because of the extreme growth targets and metrics that they need to hit for it to work for their fund. And I wish people knew that sooner. So I don't think that's something that's changed. I don't think there's enough education and knowledge about that coming to the surface for people to see. Now, markets are changing and things. I see a lot less growth around consumer and
Yeah.
obviously a lot more in every AI agent that someone wants to use that trendy word and build towards it. But there are people investing in every stage at every point of the market, whether it's low or high. And it's about filtering the right type of profile of funding to match the stage and future goals and even investment. Taking money from someone who isn't experienced in your space or can't make strategic intros, thinking they're going to be a silent partner is a lie. That's
Mm.
no such thing as silent money. So every form of capital and check that comes into the bank from an outsider should be strategic.
Note to self: to get a Bugatti, look into corporate grants. Perfect.
Exactly. Yeah. You got
See,
it.
I was talking to somebody about this today. One of the famous terms that I've heard or somebody saying is like, can you? Sure. But should you? Do you think too many founders raise money when they shouldn't?
Oh, absolutely. I see more think they can do that than who really should. Like, it's crazy to me the amount of education that we have to do before a founder comes to us because of the lack of awareness and knowledge. And sometimes it's not their fault. They see it or their friends have done it and they do really well, but it's really not a common thing. And if you want to grow your business to keep leverage and or pass it down to your kids or not worry about an exit, like there's nothing wrong with that. Like, that's still can be a fantastic business, but know that an investor is gonna require 100 times X multiple plus on your exit and whatever. Like, they're gonna have growth expectations. But for everyone listening, like, I do have a free tool for this. So I call it the capital
Yeah.
calculator. So if you are listening and DM me on Instagram at I am Cat Weaver, Kat Weaver, and capital calculator, send me that DM. It asks you your business goals, your output and growth. It'll tell you what you should expect to raise, how much, and the types of capital that will align with your goals. So like play with it. It's free, it's out there. I wanted to make sure that because I get a lot of founders who are like, I think I need to raise between, I don't know, maybe 50,000 or a million. What do you think's easier?
Sure.
It's like, oh my gosh, how are we having this conversation right now? But I'm not one to judge. I didn't come from the space either. So that's why I created this tool because it's really not as much common knowledge as you would think. It is an educated calculation, not,
Yeah.
oh my gosh, a million sounds good. And if the founder has done the math right, it's not a whole round number. It
Yeah.
never is.
Yeah. 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 Absolutely. Is there a common mistake founders make when they're explaining their businesses?
When they're what? Their businesses, sorry?
Yeah, when they're explaining their businesses and they're pitching out, I know a lot of folks that tend to go a certain route. Is there a mistake that they make? A lot of them.
I love this question. I'm huge into the psychology of pitching. 99.9% of founders I meet pitch as if they're speaking to their target consumer or as if someone's in their industry and will understand what they're doing. We never want to assume. The goal of pitching, the most advanced founders in what I teach and work founders through is you should be pitching someone who is going to go pitch your target consumer for you and on your behalf and know who that person is. It's not them. They're not going to go buy your product off the shelf or download your app. How can you dumb it down to like a 5 or 10-year-old where they feel invited into your world and can visualize it without needing to see it or look at a pitch deck in order to understand it? I'll meet founders who are like, the investors, they just don't get it. Well,
Of
that
course
means
they don't.
at explaining what you're doing. And that's okay. We're so close to it. We're so passionate. It's very hard to take ourselves out of it. But it is one of the most advanced skills of a founder is to learn to communicate to someone who isn't their target consumer.
Yeah, that's an underrated skill for sure. I want to ask you one last thing and then head into our rapid fire round, kind of like a tradition around here. Um, does success make founders better operators or sometimes worse ones?
Say this is subjective. I think quick success, it makes them poor operators from growth perspective. Like it might seem, oh my gosh, flashy and we should be feeling this all the time.
Mm.
I think that's probably where it can get maybe harmful to them. But I learned this from my business coach, and I wish I was told this sooner, is that the goal is to go create more problems. The business is never perfect, it's never fixed. You should be growing at a rate that you're continuously creating more problems. And that took me the longest time of like, if I finally fix this, we'll be good. Well, if we finally do this, I'm going to be happy and complete. When in reality, it's like if you're growing 50% every 3 to 6 months, the business should be breaking. And that's a great sign. So that mindset of tackling more and more of those problems as a positive thing is again advanced, but I wish I knew that sooner because I kept thinking I'm going to make it perfect and finally feel like it's complete and we're done and all that.
Never complete, is it? Yeah, no. I guess one last thing, if a founder listening to this right now wants to raise capital, let's say within the next year, what is the single most important thing they should start doing today?
Showing up online, whether it's Instagram and or LinkedIn or X, whatever it is, investors look at that. Building in public is so huge and important. It's not just sharing like proprietary
Yeah.
data, but they add there's a layer of credibility now by the level of consistency and your ability to show up there. And also, I'll tell you, LinkedIn has changed my life. Showing up, I have investors reaching out to me to ask to see my deal flow from the founders that I'm vetting. I don't have to ask for that anymore. I have pitching, speaking opportunities come to me. I mean, it's really, really incredible. So being transparent and showing up online will bring more opportunities and closer relationships. I know multiple founders who have closed rounds from their followers because they built up and showed that level of transparency. You never know who's lurking around. So that might surprise you, but that is my number one right there.
Yeah, interesting. So you just gotta be. And I mean, I guess we're all social creatures. We crave that, and especially if you're building a company that already puts you in an echelon of people that that command some certain level of respect, because if you've built a company and you have customers, you're scaling it. That's a lot of work. It's not that easy. For the most part. Yeah, this is perfect, Kat. You're a wealth of knowledge. So I want to go into the rapid fire round. Very quick questions, very quick answers. Best advice you've ever received, business or personal?
Everything is negotiable.
I'm just gonna get the t-shirts printed out and send them to you. All right, and you can use that. I think
I
they're gonna be super helpful. Everything is negotiable. Next, on the flip side, advice you ignored or wish you had listened to.
You should sell your company for $1 just to say you sold it. I got rid of that mentor real quick. Mentor, air quote.
Yeah. Okay, that's pretty interesting. I think that comes back to that part of like trust and yeah, you can't say it, but should you? It seems ingenuous at best. What would you tell your younger self, say 7 to 10 years ago?
Well, you got me on this one. I wish I would tell myself 7 to 10 years ago, invest in yourself more quickly. Spend the money to do that. You're the best investment you'll ever make.
Why do people do that? My mom used to tell me when I was younger, she said there's nothing in life worse than wasted talent. I never understood that. I sincerely didn't. I actually thought, what the hell? Everybody has talent. Sure. But if you waste that one thing that you're good at, there's nothing worse than that because you're not, there's the itching, some people have where you're never going to find peace for the most part. And I see people suffer and suffer and suffer. And I know that they're pretty good at what they could potentially do. Why not go all the way? What's stopping and preventing that? I know there's myriad of reasons, family
I can tell
obligations.
you easily it's fear that they potentially have success and then lose it. Or they invest in this skill or something and there's no guarantee that it will actually serve them. Or the third is that it's a money thing of I'm not willing to go figure out to get the money to do this because there's other things in the way, so it's a lack of prioritization as well. Like, a lot of that is a smokescreen, but it's mostly fear of themselves. Like I mentioned from that book, most people will only ever grow 2x in their life. And a lot of it has to do with their own internalization or the environment they've been around of, so they don't see what that future really could be.
I got one to stump you, and it's again coming from my mom. She used to tell me something, which is if a lion knew about its power, horse about its speed, and flower about its smell, the world would come to an end. So I guess we got to figure those out about ourselves, right? And then the world would come to an end because then essentially you can master all the elements and really go after, which by the way, I think you have perfected in a lot of ways. So this is perfect. All right, one more. An ongoing challenge in your current work that keeps you up at night.
How can I reach more founders while still maintaining the life and balance that I want and also go outside of me?
Hmm.
I don't want to have to be that only voice. Actually, I built my first company where I was the face of everything, but it was the only way I knew how to do it. It was just more survival. How do I grow and expand outside of myself?
Yeah, yeah. The extension of you, because then it just scales a lot better and more, I guess, for the most part. This is an interesting one. Your favorite restaurant or meal or spot in the U.S.
I would have to say meal or spot. I'm a big fan of sushi
My son
or
loves sushi.
yeah, I'd have to say if I'm thinking of a meal and like a real treat, it's gonna be sushi.
My son is a huge fan of sushi, and I'm seriously at this point, I think my mercury levels are high because of him, the amount of sushi we consume in our house. What's the favorite roll?
Of sushi?
Mm-hmm.
I would say, I'm a big fan of actually the raw scallop. Raw scallop hand roll.
Never had that.
They
I love
make
the California ones, one with the rice outside, the tempura shrimp in there, and the
I'm a
avocado.
raw kind of gal, so
Oh,
actually I did a bucket list experience last night. I said when I'm gonna hit this business metric, we're gonna go to a live tuna cutting. They actually cut it up right when this whole show and stuff. So we did that last night.
oh, right. Oh, congrats. That sounds like a lot of fun. That's perfect. And then one last, which is one tool that you cannot live without and swear by.
Well, now that everyone's using AI, I've been a really big fan of Manus AI.
Manus?
It's Manus AI. I've got if you want to message me, I've got a free
Yeah.
500 credits I could send you to try it out.
Pour for war.
But the I'm almost like speechless talking about it because the way it can pull in and organize information and build systems or dashboards
Yeah.
and automate what you're doing and pull in your tools. Like one example, I think every entrepreneur should do their own task audit to like
Yeah.
really look at their time and where it's spent. And I did that and I had it analyzed and it showed me where I had all this missed opportunity. It went into my calendar. I said, here's my to-do list for tomorrow based on what you know and my new
Yeah.
goals. It created a Zapier to like redo my calendar without me
My
touching it.
lord. Okay, that's insane. I'm gonna try it out. Thank you for the recommendation. This is great. Kat, it's been a pleasure. Really, sincerely, really appreciate it. I wrote down the name of the book, 10x 2x. I'm gonna check that out. Manus
Steal
AI.
it.
Yes. And Capital Calculator. There's a lot in here. I'll of course make sure that folks actually get to see it and use it and DM you in case they have any questions. Where can listeners find you?
Really active on Instagram and LinkedIn, Cat Weaver, as mentioned, and YouTube. Got a ton of founder and advice and deep dives, even pitch deck breakdowns, all there. And then if you're listening and raising and you want help to actually make an impact and secure some serious cash, you can find me at powertopitch.com/apply, but the DMs are always open.
Awesome. Perfect. Any upcoming project launch or talk or event that you're excited about?
We are actually doing a huge webinar this upcoming Tuesday, so I don't know when this launches, but once a month we do these live trainings. We have several hundred founders RSVP for it. We go live for an hour, super deep dive, get tactical, do live Q&A, and it's one of my favorite points of the month. And then I work with an organization called Gimme Beauty, where we're doing a workshop and all ticket sales are going to a local nonprofit. And then the last one is I host a founder and investor walk in Dallas.
All right.
Once a quarter, we get 100 plus of us walking a trail, networking. So it's not like a stale happy hour anymore. You actually get to walk and talk with some coffee. So if you ever make it out to Dallas, please let me know.
Right on. Yeah, wishing you success and nothing less, and hopefully the second round of tuna fish cutting, slicing. Hope you get to that. I really appreciate you coming on. Thank you.
I appreciate that. Thank you
All
so
right.
much for having me. It was some awesome questions.
Absolutely. Folks, if you got value out of this, share it with someone who needs to hear it. I'll see you next week. Thank you.